All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets here coming back in a little bit. So we talked about last week, markets continuing to pull back there. We had confirmed lower lows and lower highs, and we are coming down into that 444 area like we talked about. And in fact, we actually tested it today, and we came off the lows there and finished slightly negative, down just 26 cents on the spiders. I would have preferred more of a dip this week, maybe into that 50 moving average, maybe into the trend line here that we have going back to the March lows. In fact, this was the exact lows in March, and we got pretty close, but we did hold the 444 area. Now, for right now, is this leg done? Do we get a bounce here next week? I think it's likely we get a bounce next week. Is this a big bounce? Is this something we're expecting another new highs? No, I think we have too much distribution on the charts. You see the high volume selling over the last couple of weeks. And we'll talk about the Qs in a minute. In fact, we'll just show them right now. Lots of high volume selling over the last couple of weeks on the Qs, and we'll talk about this chart in a second, which is significantly weaker. But usually the first leg down of a corrective move of a bear is the weakest, and you can generally get a dip by sooner than later. And next week we do have options X for the month of August, and typically, general rule of thumb is if you're down, down big or up big into that week, you generally kind of get a counter trend move. Usually, it doesn't always work that way, but we are down, pulling back into it, and we are into a support level. So my general lean would be, we probably get a little bit of a bid next week. Doesn't mean we won't be, maybe down Monday, Tuesday. Maybe we have to go test this trend line Monday, Tuesday. Can't rule that out. But I do think by the end of the week we ended a little bit higher, and possibly, set up a move for a lower high in this market. But again, we'll take it kind of 1 week at a time here. But right now, we did get CPI on Thursday, and that came in, it's funny, it came in better than expected, but it was still hot. So it was 3.2, whereas the previous month was, I think, 3 to 3.1. And the market took this as a good thing, that inflation is bottoming. Because it was better than expected. But you see, we actually ended up rallying a little bit, and then we came pretty sharply off the highs yesterday. You see the intraday there. We did close green, but again, market's still unable to hold the gains, and we tested that 20 MA on Thursday and came back in. Today, we got PPI. That came in hotter than expected, and market sold off a bit. Namely, technology. We've been talking about this for the last several weeks. Tech should be weaker than the rest of the market, and that has been the case. We have now lost the 50 moving average on the triple Qs for the first time since January. Right here, we lost it, but we went right back up. In March, we lost it for a day. We went right back up. We've now confirmed below it here. Broke it Wednesday with the close. Thursday, we were up a little bit. And then today, we confirmed below that break. We confirmed below both of those lows, in fact. So triple Qs definitely on the weaker side. That is damage. So we're below this trend line, below the 50 MA. We've been talking about this for a while. What's the next level? Well, you'll have some support here around 360, maybe 358, pivot high, pivot low. There's a gap there that's unfilled. But ultimately, I think really before you get a big bounce, you're going down to this 100 moving average in this purple trend line here. And on the weekly, that kind of coincides with that 20-week moving average, right? So that's kind of your big target. Now, again, it's not going to go down in a straight line. We can get bounces here and there. But I do think that is kind of a bigger target here, possibly over the next couple of weeks to months. So Q's definitely on the softer side. Apple continuing lower. Again, these big tech names continuing lower. We had that big slice last week, and this has been not even a dead cat bounce. It's just kind of bear flagging there on the daily. So still some weakness here. Speaking of weakness in tech, SMCI, big AI stock, reported earnings, and lo and behold, they didn't make $1 trillion on AI chips overnight. I know it's surprising, but take a look at that weekly candle. Wiped out 5 weeks worth of trading in 1 week here. Sympathy play, NVIDIA wiping out last couple of 1, 2, 3, 4, 5, 6 weeks worth of trading here in 1 week. That looks like it wants 400. Some other sympathy plays, Palantir and AI, big outside weeks there. So AI, again, we talked about this a few weeks ago. The AI trade looks a little fatigued here, but again, that did spill over into big tech, and we are seeing the weakness in those sectors. Over to the Russell, though, still on the stronger side. Did back off a little bit this week, as everything did, but you can see here, and we did close below 191.14. So that was this breakout bar. So let's get rid of this trend line here. But that breakout bar low, we closed below that on the weekly. So that's not a good sign for the Russell, but you did get a little bit of a bounce off the 50 MA, off the gap fill. So this maybe goes up into 193, 195. Let's get rid of that too. So I would say 195 is kind of your big level there on the IWM. But again, weak markets coming in a little bit here now. Not surprisingly, the Dow was the strongest of the four. So again, when you have a risk-off environment, Dow's going to outperform. Blue chips are going to outperform. Old economy, boring stocks are going to outperform. And Dow's still holding up here, and you do have technically weekly bullish consolidation on the Dow. So that's really the only index that's really holding up well right now. I think the others are definitely weaker and seeing some money flow out here. If the Dow does pull back, 343, 345 will be support. If you break through that, there is a gap fill at 359.14 there on the DIA. That could be a possible target. All right, another area of weakness, again, technology, semiconductors, slicing through 150. We've been watching this level for a long time. We got a weekly close below it. This will have some daily support around 145, but really I think it wants to get down here into that 138, 140 area. It doesn't mean it's going to go down there tomorrow or next week, but this is now looking like it's in corrective mode here. So two weeks, consecutive weeks down, back below 150. That does look like a good target. There's also that big gap fill at 130 all the way down there. So again, this is the problem when you have these parabolic moves. You don't build any supports on the way up, and you can slice down just as fast as you went up again. To use SMCI again as an example, you went up parabolic, but look how quickly it can come down there on heavy volume too. So that stock looks topped out. But as far as the semis are concerned, those are the levels we're watching. 145 there, and then really down to 138 are kind of the big levels here in the near to medium term. If you do get back above 150, then 155 is likely your level there on the daily time frame. IGV hanging on by a thread here. So that was down 52 cents on Friday. And, we gapped down. Well, we had a green day Monday. We gapped down Tuesday and then went sideways. We did hold this weekly green bar low. So that's an important save there for the IGV cloud software. The fact that we did not negate that breakout bar is a good sign. Eventually, I do think it does get negated, and we go down and test this trend line somewhere in this area at the 20-week, 100-week, and 200-week. So there's a good support here. And then you also have this pivot around 317, 318. So eventually I think that gets hit. But right now, IGV holding on by the skin of its teeth. And, we'll see what it does next week. May just go sideways due to options X. Dow Transport still hanging on. Although they did back off. They lost the 20 moving average finally. Again, levels haven't changed. So if this goes down to, you start taking out 16,000, 15.5, 15.6. And then on the upside, 17,000. We're just going to call that. Kind of your resistance right now, but transports still holding up and still a strong industry group for the most part. That does tell me that the market is likely going to at least get a bounce here sometime soon, the fact that they are holding up. All right, so over to interest rates here. So let's take a look at the 2-year first. So even despite the PPI data or CPI data, you can see the 2-year here, and we're looking at a weekly. Let's pull up our daily there. Still holding up. So we did some backing and filling late last week, and then we kind of curled back up here by this Friday. So again, this chart looks fine. Yields are still really strong. 5-year, there you go, 4.3 again. 10-year back above 4.15. That takes out this pivot. This is going up to double top there. And then the 30-year here, again, if it takes out this, it probably makes a new nominal high there, 4.45, somewhere in that area. So yields still holding strong this week. Despite quote unquote better than expected CPI. PPI also helping with that coming in hot there. But yields still holding strong there, and they are not relenting right now, and it doesn't look like they're going to anytime soon. XHB housing, XHB, ITB both sideways to lower here this week. Still kind of looks like a rolling top to me, but no confirmed breakdown. It's still holding up really well. Trend is still strong. Again, if you take this pivot out, we'll look at 82.50 there on the ITB. For XHB, we'll look at 80 to 80.50. So nothing really changed there. VNQ bear flagged all week long. We talked about that failure. We closed below this green bar last week. That's not a good sign. Now we're just kind of bear flagging here on the daily. If we do have one more leg down, I expect it to test this trend line around 80 bucks. That should be pretty good support there, but right now it was on the softer side this week. XLF here, again, kind of just in a holding pattern. Financials still holding up just fine for right now. This can still get to 36.20, 36 to 36.20, excuse me. So that would take you right up to this pivot. Weekly chart, red bar high at 36.24. So that's your level there on the XLF to watch. KRE and KBE still holding up okay. Again, these are outperforming. We talked about kind of the old world stocks, regional banks, stuff like that, getting a little bit of a bid as opposed to technology, and that has been the case lately. They could even have one more little up move in them. I wouldn't rule that out, but then after we start getting into September, I think all industry groups you need to start being a lot more careful with. Anyways, broker dealers here backing off a little bit. We got a trend line we're watching here. Again, if that gets hit, it should be some short-term support. It is very overbought and it's pulling back there. I don't really see any issues right now with XBD. All right, let's get over to commodities. So a lot to talk about here. Looking at crude first, as always. That's up 29 cents here. I'm doing this on Friday here. And we're not going to get above this weekly resistance. We are going to close above this, though. So if we go back, I know there's lots of lines in here, but this is your red bar from December. We never closed above that ever, not even here. And we're going to do that this week. So that is a sign of strength. It still needs to get above this one. So I'm going to get rid of this because this is our big level here. And crude is overbought. I mean, we're up 20% in the last, 3, 6, 7 weeks. So this should pull back here. But it is very strong. I do think the next pullback is probably a dip buy. Where could it pull back to? Right here, right? So let's look here. We'll go back to the weekly again. Trend line. There's your previous red bar high. That should be support. There's lots of support in that area around 77. So we'll see if it can pull back into that area. If not, it could just flag and push through. But if you get above 83.53 right here on a weekly close, this is going to squeeze city all the way to low 90s, maybe mid 90s there. That's really just the next level that we have on the charts there. So crude energy having a really powerful week. We'd make some money with members this week on ERX, which is essentially a play on XLE. That had a nice pop, or a drop down to 85 and a huge pop off that. That wants to get up into the low 90s. XLE very strong. XOP very strong as well. It's backing off at 150. We talked about that level. There we go. We talked about that level. There's your red bar high. That's where we stalled out. Again, this is very overbought. It should pull back here. But again, very strong. It's overbought for a reason. Energy's on a tear right now. The SPR, that's basically at an all-time low right now. There's only so much longer they could keep draining that thing. So, and these fundamental pressures have not gone away, as we all know. But OIH holding up really well as well, up 1%, still very overbought, but still in an uptrend. Nat gas, $3 test this week, finally got up there, broke out of this channel, pulled back, not surprising, on Thursday, and then today, Friday, a little doji candle. So I think you get, and this is what I've been talking about the last several weeks, you have a big base here, right? So the next test of 3 should result in a higher low, because we just put in a base for 8 weeks, and now that gives buyers room to regroup and reorganize. This curls back up and takes out 3. This is going to go a lot higher. Right now, you saw that today. We got rejected yesterday, but instead of following through, we came down and basically kissed the 20 moving average and then closed flat. Wouldn't rule out a little bit more of a pullback here. Certainly could be the case here, but I think this curls back up. And you get through 3, again, just like oil, it's squeeze city. So nat gas showing a lot of life here and finally looking like it's ready to turn the corner and get through that big $3 handle. Okay, over to the dollar index here. So dollar did something this week. So we did close above the weekly level. So 102.56.4, and we're closing at 102.85. So that is a negated, right? So here's your red bar, inside bar. That's negated. So we are above that. I would not be short the dollar here. That's just based on the technicals right now. Next big weekly level is 103.75. Daily level is 103.37. So right there. So there is some resistance in this area. There's also some resistance right here at this red bar at 103.18. But you have a nice little daily bull flag to work off of. So I think it wants to get up to 103.30, somewhere in that area. 200 moving average as well. We'll see how it reacts there. Maybe it pulls back. But if this puts in another higher low, it could take out those levels. and then I can go higher. So dollar, I'm not doing anything with it right now, but I wouldn't be short it, because essentially what just happened is you have a failed weekly bear pattern. And when I see a failed pattern, I generally think the opposite is just going to happen. So dollar index holding up really well, and that showed a lot of life here this week. All right, over to the gold market here. So gold not doing a whole lot. It did back off again with the strong dollar. I think it's got to go down and test 1900. Doesn't mean it'll happen tomorrow or next week, but especially if the dollar pulls back a little bit. There is some daily support around 1925, 1930, but I think the bigger level, I mean, you can see it clearly as day, right? So 200 moving average, and then we got to go back to 5 years now. There we go. So there's a weekly trend line right there. There's your 50-week moving average. I think it wants 1900. If you get through that, it's down to 1825, 1850. If we start to push up, you got to get back through 2000, and then you can go to 2050. But right now it is still in backing and filling mode, so we'll just be patient with that there. And then silver, same thing, continuing to break down a little bit. I still have this going lower, but there are some serious buy levels that are coming up. Shared those obviously with members, but pretty soon I think those will hit. But silver on the softer side to get back below that trend line again, and it's trying to hold that weekly nexus of 50, 200, and 100 moving average. Again, there is still some support here, but we closed. What I don't like is you close below 2294, which is this breakout bar, and we did that on a weekly basis. So silver, I think that's go down to the next level. Doesn't mean it'll go in a straight line. Again, it's OPEX week. Next week we could get some bounces here and there, but definitely on the softer side there. Platinum trying to hold 900 here. Again, I think that wants to go down to 860, 850. Palladium getting a nice outside move here, but did come in off the highs. It got above this little trend line here. The thing is, on the weekly, you still have kind of a weekly bear flag look. So we have this down move and then kind of inside of that. Again, we'll watch this for pattern. It is thin. We did have volume. I'll give it that. It had volume, but I'll watch this for pattern here. I would prefer one more drop in Palladium as well, but it did show some, it perked up a little bit this week, so we'll definitely respect it there. Copper down to 370. Again, we've been talking about that level. We broke through this little wedge here earlier this week and down to 370. I still think this has one more low to make. Uranium here, CCJ, holding up really well. Again, nice weekly pattern. We talked about that, just kind of chugging along, stair-stepping up. URNM curling back up. Again, I talked about this weeks ago. We closed above this weekly red bar high. And again, just to kind of illustrate what I mean with the dollar, why did I get bullish on URNM? Because we closed above this red bar. So that's kind of what I'm looking at, just to kind of educate here. When I see something like that on the DXY, that gets my attention. So a similar pattern, similar setup there, but all energy doing really well here. URNM, nice move there, closing back above the 100-week moving average. Looks like we just didn't get above this pivot high, but that's okay. Still can get up to 37.50 here in the near term. Uranium looking really good. Take a look at DBC as well. If you look at ag, we talked about this last week, and again, another little inside hammer week. There's no problem with that. I love this daily pattern here. Up move, gets a little overbought. You're just consolidating. That's consolidating for a move into 25, 25, 25. So 25 to 25, 25. Some tongue twister there. Make that clear. But right there, $25 to 25 and a quarter, we'll call it. How about that? All right, so nice pattern there on the DBC. That's hanging in there okay. Ag looks good. You can look at some of the potash names. Mosaic still into resistance here, but that's holding up okay. NTR's, trying to flag here. That still has resistance at 70. That needs to do some flagging. As well in IPI, same thing. Resistance at this, 27 to 28 handle, but it's flagging as well. So ag looks pretty good. And I don't really see any issues. I think wheat has one more little drop in it. Low 600s, that is a buy area for me. Okay, lastly, over to Bitcoin. Okay, Bitcoin, still just hanging in there. Again, still at the 29,000 handle. We did get a pop earlier in the week, and then we kind of just dropped a little bit. Still a little inside bar there on the daily. Weekly, you guys know what I'm going to say. It's still just fine. I actually really like this pattern here. I think this is just waiting on the ETF news. If it gets rejected, could it have some downside, maybe in a 27.7? It's certainly possible, but you still have that 20-week moving average there that could be support as well. But if that gets approved, it's probably pumps up. I mean, as you could imagine, daily, a little bit sloppy, but the weekly is still very strong. Okay, anyways, let's wrap up here. So back over to the spiders. Again, if we're looking at this, into next week. I think we get a bounce at some point. 444 held, even if we do push a little bit lower early in the week. You got a lot of support at the 50 MA, and you got a lot of support at this trend line here. So I think we'll get some type of a bounce here, but I don't think it results in a new high. I think we will make lower highs. Again, seasonality, lots of other things going, lots of cross currents here, especially as we get into the season of rate hike lag effects. With inflation looking like it's bottoming as well. So lots of headwinds coming in here for the markets. But right now, short term, 444. We'll call it 440 on the downside for the spiders. On the upside, 450 to 453 are your big levels to watch for next week. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all next week.